Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful day and a great weekend as well. And in today's markets, guys, well, we got our relief rally bounce that is now underway. And after last week, guys, last week was such a brutal week, culminating in a big Friday sell-off. Retail sentiment was at its worst, the worst that I've seen it be in a while, and the sentiment was pretty much pure capitulation at that point. It seemed as though after 1 week of pure negativity, traders had forgot about all the previous 5 months worth of gains. People were giving up on their positions left and right, and that is when, guys, we need to step in and go for a little bit of shopping. We were also looking for first daily oversold conditions after putting in an all-time high, which is usually a very high probability area for a bounce trade. So now that the bounce is underway, the bulls have step number one under their belt, which is pretty much changing up the lower time frames in terms of your hourly, getting that hourly trend change going. And now we need to measure the size of these bounces. Keep in mind, guys, as of now, they are only bounces in an overall down trend. So we will see how high can the bulls bounce before we reanalyze this situation. So in today's video, guys, we're going to go over exactly what happened in today's markets. Obviously, take a look at our technical analysis for our major indexes and our major big tech names, see how all of those are shaping up. And this week, guys, not much in terms of macro data. So as you can see here, I have the macro tables pulled up. In terms of the data that we're going to be getting really starts on Thursday. Thursday, we have GDP for Q1. That's going to be very interesting. And then on the Friday session, we have the PCE inflation report. I will remind you guys that of the last 3 months, every single report has come in either hotter than expected or slightly had a negative connotation to it. All except for your PCE reading that we got last month, which was for February. So hopefully the one that comes in from March right here, even though CPI was a little bit too hot this month, we will see if PCE also comes in slightly hotter than expected on the Friday session, or if it actually comes in line, similar to what we got last month. The PCE was pretty much the shining light amidst a very, very dark tunnel for inflation reads as of most recently. So we'll see if we can get a good read on PCE. So not much data until then. This week is really a story about earnings, guys. Take a look at all these earnings. And obviously not all the earnings that are happening this week are on this screen right here. There is 40% of all companies in the S&P 500 reporting this week, and a lot of them as well next week. So in the next 2 weeks, guys, huge earnings cycle. And then next week, we do have a few more big tech earnings. And next Wednesday, Jerome Powell will be commenting on an interest rate decision. And that is going to be Wednesday. On the Wednesday session, we get the FOMC for the month of May and hopefully get a little bit more guidance as to where we stand on rate cuts for the year. But if you ask me, guys, my gut feeling and my also fundamental analysis of the market, I really don't think that rate cuts are coming much before this fall, unfortunately. And that has just been a byproduct of the rising inflation data that we've seen over the past 3 months. So with all that out of the way, guys, let's get right into our analysis. So you can see SPY up healthily today, 0.92%, QQQ up 1.01%. And these were actually doing significantly better before we had a little bit of take profit action in the later part of the afternoon. But overall, the markets were very, very healthy in terms of rotation. Today was a day of everything going up. Take a look at your heat map here, guys. Every single component of the market really moving up nicely. You did have a few names that were kind of lagging behind, right? UNH, Verizon and Telecom Services, and Tesla lagging a little bit behind as well. But for the most part, guys, very nice broad market recovery. It's exactly what we were expecting after last Friday's session, where we really had a lot of fear in the markets, retail capitulation, left, right, and center, and a very negative connotation to media articles coming out. That is usually when you mark a temporary, and the key word is temporary, bottom in the markets. So the bounce is now underway. On the one-day relative, guys, you can see that even better here. We got a very, very good session, very broad-based session, really nothing getting left behind except for basic materials. And today's performance has done wonders in turning around the 1 week performance as well. Now we do have some positive gainers as of the last week of trading. Utilities, consumer defensive, financials, one of your major sectors, having a huge recovery today, but we do have a couple laggards, namely technology, still leading to the downside, and that was as a result of last week's semiconductor sell-off. The semiconductor sell-off was a large component in the sell-off of the QQQs over the last week. So with that being said, guys, let's jump into our technical analysis right away. And we're going to start off with SPY. So we hinted at it a little bit, right? We have the hourly trend change underway. So bulls have completed step number one. Step number one, I was reminding you that if you want to know when this landslide of red was going to come to an end, we had to look at when are the bulls going to change the hourly trend. Now that we have the hourly trend in our favor, we need to monitor how high can the bulls push this, right? We need to be looking at how high can we get in relation to 515.61. And I want to throw the fibs on this, guys, because it's very important. We need, if the bulls are to regain any semblance of control, to reset for a daily uptrend and put an end to all of this negativity as of recently, we will need to bounce, in my opinion, as high as 505 all the way up to about 508. If we can get from 505 to 508 on this daily bounce, it does give the bulls a great opportunity to set a potential higher low and reverse this daily uptrend. So the bulls have started step number one. Now the size of the bounce is going to be crucial, but keep in mind, guys, since we are in the context of this daily downtrend right now, we are inevitably just looking for a lower high, right? For potential continuation of the downside. The size of the bounce, the level of the lower high is the most important thing. Could give me a lower high all the way up here, and the bulls look like they have a very good chance of setting the daily higher low and reversing this daily into an uptrend, right? But however, if the hourly reverses into tomorrow already and our bounce only gets as high as 500, 501 like it did today, and then we start rolling over, well then the daily rollover into continued daily downtrend will just continue at that point. So crucial point in time for the bulls. We do have big overhead resistance, guys, and this is where I do think the daily bounce will most likely stop, probably as high as 509. All of your moving averages are there, and this is our big previous horizontal area of support, which is now turning into resistance. So we'll see how the bulls can work with this. Nice little weekly bounce underway here as well, guys, but the weekly bears, I will remind you again, the weekly bears are now in control of this chart. The weekly uptrend is lost. We will inevitably be looking for a lower high, potentially into lower low continuation. So we will see how high this week can bring us with a lot of company earnings here, guys, this week, right? It's going to be absolutely pivotal for big tech to report good earnings and start lifting up these markets, guys. That is what we're going to be looking at for this week. In terms of QQQ, largely the same analysis as SPY, right? We are in the context of this overall daily downtrend. Now the bounce is underway. We have recaptured the hourly trend change. So we need to see how high can the bulls get on this hourly uptrend, which is going to be the size of your daily bounce coincidentally as well, right? However, we do have a lot of overhead resistance right now. So for the bulls to get a significant amount of lift on this bounce, I need to see them come at least as high, guys, as about 431. If we can get back up to 431, it gives us a really good shot at being able to set the higher low into a daily trend change. But anything under that, if we only stop out here at about 424 and then we lose the hourly time frame again, well, then the bulls will really have a challenge at protecting these lows, guys. It all depends on the size of the bounce. It gives us the probabilities of how well the bulls can recapture this loss of the daily trend. Keep in mind, we have a lot of overhead resistance. All of your moving averages are above us as resistance as well. And we have this horizontal line. The 433.81 line is going to be a big area of resistance. So if the bulls can get all the way up to there, I do expect rejection, and then it'll be up to the bulls to set the higher low and make an attempt at a daily trend change, guys. That will be the case in point over the next 2 weeks. Can they do it? Can they get a sizable enough bounce? Or will the bounce just be weak tech earnings, and we just roll into lower lows, which could send us, guys, into a big area of consolidation for QQQ. That would be 404 all the way down to about 385, our previous all-time high range of consolidation. That is going to be, my opinion, where the bleeding will stop. So that's pretty much everything for QQQ. Now moving on to financials. So financials, extremely healthy rotation. You can see that financials started the rotation before QQQ. QQQ is now lagging behind. So XLF started the sell-off first, and now it is first to recover as well. take a look at the size of the bounces, guys. This is why the bounces are key. The size of this bounce now has got up to our golden level, the 618 level. So that is very, very good. We also see on the daily MACD, daily momentum is now starting to shift back to the bulls, right? So that is another positive indication. So the size of the bounce is quite healthy now. You can see we're back above our moving averages, which is good in terms of support. However, we are dealing still with this overhead area of resistance, our previous all-time high resistance, That is the level what we're battling in right now. So we are expecting the lower high. Now it's up to the bulls. As soon as we lose this hourly uptrend, you can see clear as day, hourly uptrend right now, right? So as soon as we lose this, you will know your daily bounce is finished at that point. And then as soon as it is finished, we see how high did they get, and that will give us an indication of if they've created enough space to get the higher low into potential higher high shift. Looking fairly decent for your bulls now. I like the size of the bounce. So step one for the bulls is a green check mark. They have now succeeded in putting in a high enough bounce. Now it is up to them to protect this bounce and reverse this into a daily uptrend. That is step number two. So as of now, these are only all relief bounces. In terms of our weekly on financials as well, right? We do have the weekly higher low right now. Anything above $37 was pretty much our weekly higher low. Now we're making that attempt, guys. We never lost the weekly uptrend on financials. Just want to be clear about that. So the worst case scenario for the bulls at this point is getting in a very juicy bounce, rolling it over completely. That, unfortunately, guys, would be a confirmed weekly downtrend. We're not there yet. Not ruling the bulls out yet, looking very decent on the size of this bounce. And I like the fact that financials was one of the first to sell off, and now they have kind of advanced everybody in the rotation upwards. So looking fairly healthy. Moving on to healthcare at this point. So healthcare up about 0.38%. Healthcare still kind of trapped in the bottom. So healthcare was one of your first sectors to decline with financials. You can see QQQ, their decline really only manifested over the past week. Healthcare has been selling off for the past 3 weeks, and financials as well for the past 3 weeks, they have started their sell-off. So where are we on healthcare right now? Well, this green box right here is the area of support. It was prior all-time high resistance, should now be acting as your level of support. That is why the bulls are reacting in a good defense mode right down here. Now, today, something significant did happen, guys. Our most recent, daily downtrend as of now, and your third leg of down started with this guy right here. And what did we do today? We came back up and engulfed him almost completely before giving it up into the late session. So your hourly bounces are underway. We're now well above our moving averages on the hourly, so I would like to see this hourly trend continue into tomorrow and the Wednesday session. If we can get that engulfing move going here, guys, it's going to give the bulls the best chance at resetting for a daily higher low into daily higher high. That would be your daily trend change, and that would put an end to your weekly sell-off right here. And then we obviously need to do this. We need to do the same thing. Measure the size of the weekly bounce in relation to your leg of selling. So this is a confirmed weekly downtrend, guys. It will take a few weeks at least to reverse, 3, 4, 5 weeks. Whenever we get weekly downtrends, it takes a very long time to get that confirmation, right? The weekly time frame is not the 15-minute time frame. So just making that clear. Step number one, the bulls have done a good job now. Now what they need to do, step number two, is give me a daily uptrend. And then after we get the daily uptrend, we measure the size of that daily uptrend in relation to our weekly moves, guys. This inter-time frame analysis is crucial to be able to measure if we have gotten relative bottoms, or in the other direction, let's say over here, whether we've gotten relative tops. It's the same analysis that I do on every single chart. We're really just looking for who is in control. Picking levels, guys, is not the end all be all of technical analysis. If you're just relying on certain levels, right, that is not the full analysis. We have to know the momentum of how we're coming down into these levels. Do they couple up with oversold conditions? And when we get the bounces, are the bounces juicy enough to warrant a trend change? All of that combined makes your analysis whole. Now, moving on to SMH semiconductors. So semiconductors also with a nice little bounce, 2%. Doesn't look like much because Friday's sell-off candle was 4%, but still very decent. We got the exact same trade I was talking about here, guys. All-time high leading into first daily oversold conditions after the all-time high. Usually you get a bounce. This was the trade I was talking about on Friday. It happened on the SPY. It happened on the QQQ as well. And there was a few others. Financials, it didn't quite get there, but the bounce was good. Healthcare, well, healthcare did actually get there. They stood there for about, 4 or 5 days in a row. And then we got our first daily move up after oversold conditions. And SMH was literally just the same. First daily oversold conditions after your all-time highs, usually representing a good bounce trade. That being said, we are still in the context of a daily downtrend. So now we're just looking for a lower high, and then it remains up to the bulls to either defend this lower low and set a new daily uptrend, or if the bounce is too weak, just roll over into further daily downtrend and roll over into further weekly downtrend as well, now that we are in a confirmed weekly downtrend. So the job is not done. The bulls have put in a nice healthy bounce. We have a lot of overhead resistance here, guys, pretty much at 213. You can see all your moving averages are there, and your horizontal previous support, which is now resistance, is there as well. So if the bulls can get back up to this level here, guys, it's going to be a fairly juicy bounce indeed, right? In terms of your fib levels, let's just put the fib levels on it right away, right? So if we put the fib levels on this trade right now, if we do get a bounce up to the 13, up to 213, that would be about a 62% bounce. That is fairly decent. So I could see a situation where we bounce all the way up here, get rejected from there, and then we'll have to see, can the bulls have enough in the tank? That would be a nice bounce, but the job is not done until we recapture the daily uptrend. So that is just how I'm seeing things, guys. Across all of your major indexes, we could get a few more days of bounce at best, and then we will encounter areas of resistance that are too large in these current somewhat negative market conditions to just V-shape this as if the last 2 weeks didn't happen, right? It all depends. Can the bulls play defense after these lower highs are set? Can they reset for the daily uptrends? And that is the same, guys, across any of these indexes that we're looking at that were in such oversold conditions as of last week. In terms of the weekly on SMH, guys, I've said this before, even if the weekly downtrend does continue, we are just looking for that monthly higher low on these charts. And the lowest, in my opinion, that we may be able to get on the SMH will be probably 175, tagging this 12 EMA. Seems to be like a very healthy zone of retracement before potential resuming our uptrends later on in the year. Moving on to the Russell now at this point. Russell also with a little bit of a bounce, but the Russell, guys, in relation to all of your other sectors, is just a carry trade, right? It is not doing anything on its own. The Russell, if the rest of the market is green, the Russell will be green. If the rest of the market is red, the Russell will be red, probably even more red. This chart is heavily affected by interest rates as well. I'm really not expecting growth stocks to have much of upside really before the second half of the year to begin with, just because they're so tied into interest rates. That being said, guys, we are in the context of an extended daily downtrend at this point. So now we're just looking for the size of the bounce now that our bounce is underway. First hourly trend change has now been accomplished. So the bulls have step one. Now we need to measure the size of the bounce in relation to 203. Get me as high as possible in relation to 203, and we can have a chance at resetting into a daily uptrend. That level that I'm looking for, guys, need to see as high as 198.56 at minimum to give the bulls the best chance at resetting this daily into a daily uptrend. As of now, guys, we are just stuck in this daily downtrend. So if the bounce remains weak and we encounter some moving average resistance up here, right, we may just be looking at the potential revisit of these lows, and that would just extend this weekly consolidation further. Keep in mind, we are in the context of a weekly uptrend that has been lost since we flushed the lower lows right here. So now the bears have taken back so much space at this point, guys, that I really do believe even if we get a slight daily uptrend here leading into the month of May, unless we get some positive macro data on inflation at the midpoint of the month of May just be looking for a lower high, maybe then to revisit these lows right here. And that would be a fairly nasty head and shoulders if it does play out. I don't want to get too ahead of myself because obviously there's a lot of trading leading in to these next couple of weeks, right? But the Russell, to sum it up, guys, I'm not really interested in the Russell unless I can get some extremely juicy prices. And by extremely juicy, I'm talking 185 or better. That would be the only time that you'll probably see me play the Russell. As of current times, with all the sell-offs in the most recent weeks, guys, I just think there's so much more solid opportunity plays than the Russell. Namely, a lot of big tech names, guys, are much better buys, in my opinion, than the Russell is down here, despite the fact that it is crushed. Moving on to the Dow Jones now at this point. So Dow Jones Ethereum's not looking too bad, up 0.67%. The bulls have also completed step number 1. So you see this extended hourly downtrend right here. Now you can see what's different, right? We're now back above the moving averages. We do have the hourly uptrend in motion. So if we can continue our hourly uptrend, we will measure the size of this daily bounce, right? A lot of overhead resistance above us right now. 38,500 is your horizontal previous support. That's going to be resistance right now. And all of your major moving averages are there too. So the size of the bounce is going to be in relation to 38,975, right? This second leg of selling right here. Need to get as close as possible to that guy if we want to be able to take him out after. So we need to get as high as we're almost there, guys. 38,500. You see how this fib level lines up pretty much with your overhead resistance line and with the moving averages as well. Sorry if there's too much on the chart. Maybe if I zoom in a little bit more, you'll see that a bit clearer, right? The 618 is in confluence with everything right now. So the key scenario that I see potentially playing out on this chart will be a potential revisit of this area. Maybe we get a little bit higher if the markets continue green into tomorrow and Wednesday. Any more than that is the best case scenario. It gives the bulls a good chance at creating enough space to set the daily higher low into the daily trend change. So similar to the rest of your indexes, we are still monitoring the size of the bounce. We are always expecting a lower high, guys, right? Whether the lower high is all the way up here, that gives the bulls the best chance, right? Well, that would be an engulfing move, but you guys know what I mean, right? If the lower high is already set right now and we start rolling over, in my opinion, guys, the bulls haven't created enough space yet to really guarantee us a good chance at a daily trend change shift. As of now, if the markets were to roll over into tomorrow, only with 1 day of bounce, guys, it is not enough. We'd just be looking for daily lower lows, continuation of the daily downtrend, and just continuation of this weekly down move as well. Not a weekly downtrend yet. We have lost the weekly uptrend, but it's not a weekly downtrend. Weekly downtrend would be lower high into lower low. So we will see over the course of this week how the Dow Jones performs as well. Now, we'll do a little bit of crypto since we have time today. So Bitcoin doing something noteworthy here, guys, right? So Bitcoin was in the context of this daily downtrend. Now we have reverted this into a new daily uptrend. So daily uptrend has been set. It's not pretty, but it is indeed a daily uptrend. We're now back above our range of consolidation. I was keeping an eye, guys. 66,000 down to about 58 was a very big range of consolidation. So if we can get back above that, it really gives the bulls the best chance at expanding this weekly. Something that I noticed on Bitcoin, however, is yesterday when I was doing a little bit of chart analysis on this, is this pattern right here looks eerily like this pattern right there. So watch this, guys. I'll just pull it up as we go through this, right? So you can see we got up to the previous all-time highs right here. Let me just move the chart sideways so you guys can see it, right? So we got up to our all-time highs right here, 2 weekly doji candles red. Got up to the all-time high here, 2 red doji candles in a row. Then we did one last push up before we got 2 big weekly candles in the red. Last push up before we got 2-3 weekly candles in the red. And now we're making one last push. They made one last push there, and then they got completely engulfed. And look at the timestamp at the bottom of the chart right there. That was the month of May 2021. The timelines are lining up. Now, whether this is pure coincidence is anybody's guess, obviously, right? So we're not going to use that as the end-all be-all of the analysis. I just found that to be very, very curious indeed. Obviously, we're going to focus on our current price action and see the best that we can do with that. But Bitcoin doing a good job here, guys, of protecting from this invasion of the weekly downtrend, right? As of now, still looking somewhat decent, even though we did lose these lower lows. We never really closed a candle below that, right? So we're kind of just still maintaining this tightening range. I would like to see Bitcoin bulls expand this into obviously the all-time highs, and then we can crack the all-time highs. That would be the best. However, if we continue on into an extended weekly downtrend through the month of May, let's say tech earnings are not that good, the risk-off sentiment starts being more prevalent, which means that people pull money out of riskier trades, growth stock trades, right? And think of Bitcoin is also encompassed in that. Then we might get the weekly rollover, and that would just be, once again, for extended monthly consolidation. As of now, consolidation consolidation is still very healthy on Bitcoin. I really don't see any major red flags right now, guys, in terms of Bitcoin. Moving on to Ethereum now. So Ethereum also trying to reverse its daily downtrend right here, as you can see, and Ethereum is doing a good job. It is almost there yet. We are still just looking for the lower high, so the higher low into higher high daily uptrend reversal. The bulls are putting in a nice bounce though in relation to this guy right here. We've almost put in a 100% engulfing bounce, so they have created a decent amount of space to reverse that daily trend change. We do have moving averages as resistance above us, which kind of tie into this previous area resistance, which is now going to be resistance for Ethereum as well. So I would like to see something like this at best case scenario for the bulls to be able to reverse this downtrend scenario. Ethereum, contrary to Bitcoin, did close weekly candles into lower lows, so we are just still in weekly lower low consolidation. If we do get that daily uptrend shift here, we'll measure how high can the size of this daily bounce come into this weekly move right here, right? The same analysis we just did on the daily for all of our major indexes, right? We're doing it on Ethereum now as well. So if we get the daily uptrend, we want to see how high does this daily uptrend carry us in relation to our most recent weekly lower high of 3650. You need to see the bulls bounce high enough that they can create some space for either the two-step weekly recovery or just the V-shape engulfing mode as a whole. As of now, guys, just very healthy monthly consolidation on Ethereum. The lowest I can see this go throughout this bearish cycle in the markets, guys, is maybe 26 down to about 2400. Still unsure if it's going to go there. That all depends on the larger sentiment in the market. Now, moving on to our big tech names, guys. So moving on to Apple. Apple, not looking too bad today here, 0.51%. But now that we're below, guys, we're below our big area of resistance as well, right? So this 166 now becomes resistance now that we're below that right now. And it's not looking the best for the bulls. Apple does have earnings next Thursday, not this Thursday. So still amount of time. Apple will probably be influenced, guys, however, by all of your big tech earnings that happen on Wednesday and Thursday. So if those have a negative connotation to them, expect Apple to maybe just roll over into furtherance of the daily downtrend until they can have their own earnings, and then we will take it from there. One thing is for sure though, the bears are in full control of this chart at this point, guys. The daily bounce on Apple is barely underway. You can see the bulls looking fairly weak here from the Friday session. They do have a recapture of the hourly trend change, but the bounce overall since Friday has been relatively weak, guys. Apple, you know, there was some companies that were up 1.5%, 2%. Apple really not getting much love. I think people are really waiting for the earnings results because they had lower than expected iPhone sales in Q1. Their demand was down about 10% year over year. That is the expectation. So it seems to be that a lot of people are very pessimistic about Apple's Q1 earnings results, and it's really showing in the price action here, not able to catch much of a bid at all. Although the daily bounce is underway because we do have an hourly uptrend right now, right? Need to measure the size of the bounce currently here, guys. We are now in daily full bear engulf mode. So what we need to see to reverse this prior to earnings, I need to see the bulls put in enough of a bounce as they can, right? In relation to our most recent move, that would be pretty much 171 up to 173. If we can get back up to there, guys, it gives us enough room that if maybe even earnings are bad, we may not flush to lower lows. The bulls may be able to save the double bottom and then potentially reverse this, right? However, similar to Tesla, if we just kind of grind around in these lower levels prior to earnings, and then earnings comes out and is negative, that will be the daily downtrend flush. That will just be the continuation of the weekly downtrend as well, and we will be targeting 155 to 150. If we hit 155, 150 here, guys, this is your 200-week moving average, and you can see how many times Apple has lost the 200 weekly in the last 15 years, right? Pretty much no times at all. No times at all. Only back in the Great Recession of 08 and 09. So for the past 15 years, since, you know, whenever we're not in a great financial recession that shocks the world at this point, right? Apple usually does hold that level. I will be going heavy, probably leap call options if we do see those levels. So just stay patient on Apple, guys. You know what you have. You know the company that you're invested in. Such an amazing company, guys. It's just, as with all companies, they tend to go through this negative news cycle at a certain point, you know, in time. It happens to all companies. I'll remind you the negativity that NVIDIA went through in 2022, the negativity that Meta stock went through in 2022 as well. And there's a number of others, right? It just happens for these companies sometimes. You just have to remember the fundamentals of the stock, why you're invested in the stock, the power of Apple's ecosystem, right? It's not going away, guys. This company is one of the best best moats in the world, and it's currently offering you a tremendous discount at current prices, down 17% from the all-time highs, guys. It has never been a bad opportunity to buy Apple when it was down 17%, right? Even in 2022, when the entire markets were falling apart, Apple really only plunged as low as about 26% here. From this high right here, another 26%. And this is when the entire market was falling apart, guys, right? So now the fact that the markets are still relatively good, we're still long-term bullish for Apple to be down 17%. If we hit that 155 mark, take a look. What would be that percentage, guys? It says it on the screen, right? 25, 26%. Similar to down here, was never a bad opportunity to buy Apple at these levels of discount. So keep that in mind. So now moving on to AMD. So AMD up 1.36%. Nice little daily bounce underway. Few areas of confluence. We had the 200-day moving average, this green line right here. And we had first daily oversold conditions after an all-time high. And you remember last week, guys, when I was doing this analysis, every single stock that hit over all-time highs and then pulled back, and we saw first daily oversold conditions usually always get a bounce. Is it a guarantee that you just completely reverse and go back to the all-time highs? No, but it is a good area for somewhat of a swing trade for a bounce opportunity. So AMD is now currently displaying those characteristics. So we're in the context now of this continued daily downtrend that we know. What we're looking for now, similar to the rest of our indexes, now that our bounce is underway, guys, I wouldn't truly say that the hourly trend change is underway, right? We just had one hourly upswing right here. They need to change this into tomorrow. If we can change this into tomorrow, well, then our daily bounce will be underway, and we measure the size of the bounce in relation to 164.30, this lower high right here. For the bulls to put in enough of a bounce, right, we need to get at least as high. I'm sorry if it's a bit small right now, 157.74. Where's 157.74? Well, fitting enough, it's the bottom end of this line that I've highlighted on the chart now for the past 3 months of time. So if AMD can pull up into this green box right here, they will create enough space to give the bulls a chance at resetting this into a daily uptrend if ever they can't V-shape it right away, right? So that is what we're looking out for on AMD. However, if the bounce is weak and we just roll over to lower lows, continuation of daily downtrend, continuation of weekly downtrend as well. And at that point, guys, you have to look for your lower levels of support. The first level, we're coming into it right away, 150 down to 140. And then the next big one, guys, is going to be starting at about $130. But let's deal with this one first. These are the guys that are going to play the most defense right now. And your 50-week moving average is sitting right down here at about 140 as well. So we'll see, can the bulls how much of this bounce can the bulls lock in over the course of the next few days? And that should give us a better indication of how AMD is shaping up for, for the daily trend change or for the bearish rollover. They have earnings next Tuesday, so I'm not expecting tremendous price action on AMD. I would, however, like to see them put in a significant bounce at least before those earnings. That way, if ever earnings are underwhelming, at least we won't be able to flush these levels by too much, right? Now moving on to Amazon. So Amazon, not looking too bad, 1.5% to the upside, looking fairly decent, but we did lose something on Amazon, which was on our lead bulls last week, right? We lost the daily uptrend. Now we have flushed to lower lows. Now we are just looking for a lower high, and then we will see, depending on the size of this bounce, can the bulls recapture the daily uptrend, or will the bounce just be too weak? Will we roll over to lower lows? So Amazon, guys, with earnings next Tuesday. So going to be a very pivotal day for them. I don't expect much price action from them before that time. However, one area that I'm watching before earnings is going to be this whole pocket right here, 171 down to 178. I would need to see the bulls hold that pocket prior to earnings, guys. And we are now below the 178. 178 was a key level that we broke above recently, huge resistance in 2020 and 2021. And now we've kind of broke back under it over the last week of trading. So the bulls looking decent. Our hourly trend change is underway. Need to see the size of the bounce that results from this position on Amazon, of course. All in all, looking fairly good. If we were in a situation where we roll over into earnings and then earnings is bad, we could be looking at recapturing the previous gap from earnings, and that would be down to about 160. This area right here, guys, 165 to 160 is where I want to be making a fairly large trade on Amazon. So we're going to keep our eyes peeled if the trade comes to us over the next week. Moving on to Google now at this point. Google 1.43% to the upside as well. They had a very good day, and Google is kind of caught in an in-between situation. So we had a nice daily uptrend right here, and now we were looking, well, last Friday, they set the lower lows. So technically speaking, this was the start of a daily downtrend. The bulls have now put in a very nice move today, but we're still very, very tight in terms of this price action, guys. In my opinion, it is still a confirmed daily downtrend, right? Today's trading is not enough to reverse that. So what I need to see from the bulls tomorrow is I need to see continued push to them, coming back up to our all-time highs. Only then will I be able to say, okay, this daily downtrend was only very temporary. Now the bulls have engulfed the move right away, and we stand a chance at resetting this into a daily uptrend. However, they do have earnings this Thursday. So what all these elements that I've just described, guys, could just get thrown out of the window for earnings. Google is going to hit a pivotal point, in my opinion, for these earnings. It's very, very simple. Either after earnings, we're going to smash through to new all-time highs and start hitting into the 160s. We know that, right? And at that point, there's no overhead resistance because it would be the all-time highs. But if Google misses earnings for any which reason, guys, well, let's just keep in mind where we are right now and what gaps are there to fill. This was the gap off the Apple and Google news collaborating with Google's AI to kind of help Apple out. And that's at a very big gap between the 144 and 147. So if Google earnings are underwhelming, we could potentially see a sell-off of about 7 to 8%, depending on where we are prior to their earnings, and that would be enough to fill the gap. If ever that situation happens, guys, I will be a buyer of Google because we will only be looking to set the weekly higher low for further trend continuation, and also going to be looking to set the monthly higher low for potential further trend continuation. So this green box right here, which is 144 down to about 138, this is such a juicy opportunity for Google. If we do come down here, this is exactly where I'm going to be playing that stock relatively heavy. So looking fairly decent on Google right now, but fairly muted price action, guys. Very tough for me to give you, the price action scenarios, considering the fact they have earnings in literally 2-3 days, right? So now moving on to Meta. Meta kind of in that same situation. Meta with earnings on Wednesday. So only 2 days of trading remaining for Meta, right? So not much price action can be derived, and Meta should move fairly heftily in either direction after earnings. That being said, we are in a daily downtrend on Meta right now, and we're dangerously close to losing our weekly higher lows, right? This whole weekly uptrend is predicated on maintaining these higher highs and higher lows, and now we are in the jeopardy of potentially losing those levels right now. So coming up to a crucial point, I would like to see Meta maintain these lows right here prior to their earnings cycle, right? Because if ever we flush below here prior to earnings, let's say tomorrow is red and then Wednesday is green, it would just be for lower high and then into earnings. If earnings are bad, guys, it's just going to end up in the daily downtrend flush. At that point, we're going to get the weekly flush as well. And on Meta, what I'm looking for on Meta, guys, is to fill as much of the prior earnings gap as humanly possible. If I can see Meta, guys, between 420 and 400, I will definitely be taking that trade myself as well. So few days before earnings, so I'd rather not make too many predictions of price action before then. One thing's for sure as well, if Meta does extremely good after their earnings, well, in that case, guys, it will be daily engulfing move, and we'll just be looking for the continuation of the daily uptrend, and they will be saving the capacity for the weekly flush as well if they do well on earnings. So really everything relies on earnings for Meta. I will be playing short puts on this earnings cycle, and I already gave you guys my levels, right? I'll be looking probably 420 to 400 as low as I can get while still getting some decent premium. Moving on to Microsoft at this point. Give me a quick second. All right, so give me a quick second, guys. The reason I'm kind of flying through this one, guys, I'm really trying to keep these videos under 40-45 minutes at tops, right? So let's maintain on course here. So Microsoft up about 0.46% today. Not too bad of a day for Microsoft as a whole, right? Microsoft really had a big flush down here. This is all pretty much one daily move. So we were trying to maintain above this range of consolidation for the past couple of weeks, and then the last week of trading happened, and we undid pretty much everything. It was a gorgeous weekly breakout. It was a weekly bull flag. We were looking for continuation, and the market said, no, you're not. We're going to pull you right back down into this range of consolidation. So now Microsoft is fighting pretty much at the lower level of this range of consolidation, 397. Microsoft with earnings obviously on Thursday as well, so price action could be fairly muted. If we do see a little bit of a bounce, however, before then, guys, right, we need to get as high as possible, give ourselves some space. If not, we risk losing this level, guys, And if we lose the 397 prior to earnings, and then earnings is bad as well, that will probably be your all-time weekly flush. It will be the weekly flush on Microsoft as well, and we could start revisiting these 377 down to about 365 location right here. That would be a very juicy entry for Microsoft. That would be a sell down on Microsoft, about 12 to 16%, which was the extent of their sell-off last October as well. So that would really be in line, and it's right next to my green box. I haven't touched my green box on Microsoft in forever at this point. This is my sweet spot where I would consider adding more long-term Microsoft shares and also making a little bit of a swing trade play on it, potentially with some call options too. That would be 360 down to 340. I'm not saying it's going to go down there. I'm just saying if we get close, that's going to open some trades in this area. So looking fairly good. But as I said, guys, fairly muted before our Thursday's price action, right? Basically anything that happens prior to Thursday is not really going to matter, because then Microsoft is either going to do one of two things. Either going to recapture this range to the upside as if nothing happened, right? And try to reset this. Well, we really haven't lost the weekly uptrend just yet, right? But one thing's for sure, if we break to the upside, we'll just recapture it. If we break to the downside, it will be confirmed loss of the weekly uptrend at that point. We'll just be looking for healthy monthly consolidation. So that's pretty much everything for Microsoft. Moving on to Netflix. So Netflix starting to recover a little bit from their earnings, right? They did come down a little bit more to 542. We did have a nice little bounce underway. So our hourly trend change is not very pretty, but we do have an hourly trend change. So we can say that our daily bounce is underway. Obviously, Netflix having lost all of your ranges of support. At this point, your daily bears are in full control. It is a daily downtrend, and we are in heavy weekly consolidation mode, having lost the weekly lower lows as well. It's not a confirmed weekly downtrend just yet, but we did lose the official weekly uptrend. So the bulls have a lot of work to do. I'm not going to lie on Netflix, definitely have their work cut out for them. What we need to see is how high is this bounce going to get. I'll give you the levels here, guys. We need to see the bounce get at least as high as 591. If we can get as high as 591 on this first daily bounce, it gives us the best chance of resetting into a daily uptrend thereafter, especially if we can get back above this level of contention right here, talking about 575. I'll remind you guys, 575 was hugely important back in 2020 and 2021. So it's a very pivotal level. And if we get above that, we're going to try to get above our weekly 12 EMA as well. So little first step is underway. The bulls now have found some footing in this lower area of support right here. But if ever the bounce is too weak and we get rejected by 575, start rolling over, high probability that the daily downtrend just continues rolling over, weekly consolidation continues moving to the downside, and we just are looking for a monthly higher low for further trend continuation. My favorite area for Netflix, guys, comes down all the way, 510, all the way down to about 475. That is my juicy pocket that I will be looking to play on Netflix if we do come down there. Now moving on to NVIDIA. So NVIDIA up 4.35%, looking fairly decent on the day as well, up to about 795. So really doing a great job of trying to counterbalance some of the 10% downside that we saw on the Friday session, right? So with step number one underway, well, we have an hourly bounce, but they still haven't confirmed the hourly trend change. If we can get the hourly trend change into tomorrow, our daily bounce will be underway. And then we really need to measure the size of the daily bounce in relation to our most recent leg of selling, which would be this guy right here, 885, excuse me. And the levels that we're going to be looking for here, guys, is going to be at least as high as 838. If you can get me as high as 838, guys, the bulls have a good chance of reversing this into a new daily uptrend. But if the bounce peaks out here and drops tomorrow, likelihood of rolling over into continuation of the daily downtrend is highly likely. And at that point, I'll remind you, we're going for the gap fill, prior earnings gap fill, 688 at the lowest point. I really love NVIDIA, 750 down to about 700. This is the area that I'm probably going to be looking to make a first entry position into the stock, as we are now in a very healthy mode of weekly consolidation, right? You put the fib on this consolidation, guys. Look how healthy the bulls are. Haven't even pulled back 50% of the move yet. 50% of the move would be at my sweet spot target, 725. So the bull's still looking very healthy, and this is all in the grand scheme of monthly consolidation as well. All in all, NVIDIA chart looking very, very healthy. This could be a very good opportunity, even if we do get some further extended dips, to start building some positions and carrying this company into the second half of this year, and especially 2025, guys. 2025 is going to be the best year for most of your semiconductor companies, so just keep that in mind. Moving on to Tesla now at this point. So Tesla coming dangerously close to its lows, right? We have earnings on Tesla tomorrow. So dare I say the price action levels that I give today are going to be completely useless, because earnings is going to be such a heavy event. Take a look at your options chain on Tesla, right? Let me just refresh this options chain on Tesla, and you'll see how much the market is currently paying. Well, let me give you the expected move on Tesla. I know I didn't give it on anything else. Let's just give the expected move on Tesla right now, right? So the expected move on Tesla is 9% either way. To the downside, that's 129, right? So look at the premium. Let me just pull up the premium because I was looking at it yesterday and it shook me how low Wall Street potentially expects this one to go if this website will cooperate. I mean, we'll come back to it. Give me a second here. Let me just do all of the money, then we'll come back into this. So what I want to say on Tesla, guys, is that we're now below all of these current areas of support. Our next big area of support currently, we're kind of starting to deal with it right now. It's these guys all the way back. You can't even really see it clear on the daily because it's all the way back in 2021, right? So it's this section of the chart right here, 149 all the way down to about 120, right? This whole pocket of support, that's going to be our pocket that we're looking to count on for earnings to save us, because after that, guys, the next level of support is the $100 level. I'm not going to lie, right? So the daily bears are in full control. Weekly bears are in full control as well, right? Anything that happens in the tomorrow session, in my opinion, won't really matter. Even if Tesla bounces 4 or 5% tomorrow, it could go either way on earnings. If earnings are positive, we could be expecting a high enough bounce to give ourselves the space at recreating the daily uptrend. If earnings numbers are positive and if the guidance as well and management's sentiment on the call are bullish as well. If everybody leaves Tesla earnings, the numbers and the conference call with Elon and the rest of management, if all analysts and everybody leaves that conference with kind of a depressive state of mind, to say the least, as the last two earnings calls have been. I mean, the energy, guys, on the last two earnings calls was literally -10. There was no energy from management, no energy from Elon. Everybody sounded depressed. And, it's just a byproduct of them, their stock coming down. They're just, having demand problems as well. So this could go either way. Let me show you the options chain for this, right? Even the $100 strike for Friday, and this is crazy, right? Because you saw the expected move. The expected move usually, even 2 standard deviations away from the expected move, which would be $13. Another $13 from 129 would be about 116. Usually past 2 standard deviations, so past 20%, there shouldn't be much premium left in any of the contracts. So anything below 115, 116 really shouldn't have much premium in it at all. There's still, in the 100 strike, guys, there's still 26 cents. The 102s is still 30 cents. That is still a lot of premium, guys. It just goes to show that a lot of people look at the open interest right here. A lot of people, guys, are betting on this earnings to be the downfall of Tesla, the retail capitulation, analyst capitulation, everybody throwing in the towel at the same time. What does that mean to me? Well, it's going to open up a buying opportunity. We're going to stay patient with it, obviously. But if I can get Tesla, guys, below $100, we're going to be making a fairly decent swing trade on it, right? I'm going to need to get these as low as possible. I'm not saying it's going to go there. It can go either way tomorrow. We're going to keep an eye on earnings and I'll cover it on the channel. So keep your eyes peeled. I am not playing Tesla before earnings. You'll see in my portfolio recap at the end of the video, I'm playing pretty much every single company earnings this week, except for Tesla, for that specific reason, guys, because if it's bad, it's going to be really bad in my opinion, because of all the capitulation. It'll not be bad after the earnings. It'll be bad the next 2-3 days as people start throwing in the towel one after the other. And then we have to wait for that bottoming process. So be patient, please. Be very careful. Moving on to Palantir now. So Palantir not having too bad of a day, 2.44% to the upside, looking fairly decent, guys. We're still trying to get our first daily bounce underway, right? So our overhead resistance right now is the moving averages, talking about the $22 level. And then above that, 23.13 is going to be the last line of defense as well for the bears, right? That is the horizontal prior support, which is now resistance. So the bounce on Palantir is underway. We can see that clearly. Nice little hourly bounce. Need to get the hourly trend change in motion tomorrow. And then when that bounce will be further underway, we will measure the size of that bounce in relation to 23.13. And the bulls need to get as high as 22.05. So if we can get a bounce to 22.05, maybe get rejected by this confluence of moving averages, give us enough space to set the daily higher low and maybe start challenging this and get back the daily uptrend. That is this best case scenario for Palantir right now. Palantir is still sitting in a very juicy location right now. Yes, we are in a weekly downtrend. Yes, we are in monthly consolidation, but it is just that monthly uptrend, healthy consolidation coming into big previous support here, guys. I can't stress enough how big this support level is. Just take a look at it, right? How many months did we get rejected? I can even pull this green box even further, right? How many months did we get rejected, right? As support, 21 down to 19. How many months here did we get rejected from it to the upside? So stands to argue that this should be pretty solid resistance, support, now that we're pulling back into it. That's where the bulls are mounting their defense. So I do still like Palantir in these levels right here, looking like a fairly juicy opportunity for us to be able to attack that $28 mark later on, potentially second half of the year. Moving on to PayPal right now. So PayPal as well, up about 1.41%. So PayPal doing a good job, right? We are in the context of this new daily downtrend, and the bulls have put in a decent move, I'm not going to lie, in only 1 day of trading. However, there's a lot of confluence now, guys. You can see it best on the chart. All of the moving averages are now there. And the 200 daily, this green line, very dangerous guy as well. So the bounce size is very decent right now. I agree with you. The last leg of selling was pretty much a very small leg. So it's nice to see that we've almost fully engulfed this move. The bulls have created enough space. And where are we creating the space? Right above our 63 to 61 area. This is these two yellow lines, the horizontal area of confluence of support, looking very good. So what I need to see from the bulls is either the two-step reversal process into a new daily uptrend, or the engulfing move, get me back above all these moving averages, then use them as support and try and reset that daily uptrend and try to put an end to this most recent leg of weekly sell off, right? So still in a nice weekly uptrend, still looking for the weekly higher low with this confluence of moving averages, the horizontal two yellow lines of support as well. That's what I'm looking for here, guys, to restart this rally on PayPal. But PayPal is beholden to the rest of the market, guys. If we are only looking for lower highs on the rest of the market, right? Just looking for a little bit of a bounce and then a retest, PayPal is going to do the exact same thing, right? We may get a daily bounce underway, and then it'll be up to the bulls to protect from the reversal down back to a daily downtrend and protect this weekly from really starting to flush these levels down here. So that's what we're looking for on all these major stocks, guys. That's pretty much everything I had for you guys today in terms of the stocks. Now let's take a brief look into my portfolio, and I'll give you guys an update into how I've been trading. So guys, taking a look now at the portfolio. I know I've been promising you guys a portfolio update for the last couple of days, and here is the much anticipated update. So pretty much last week, guys, the portfolio sold off just the same as the rest of the market, but I cut everything pretty much last Wednesday. I was saying that I wanted to see ASML earnings and their guidance for the semiconductor industry as of last Wednesday, and I would make a decision what I was going to do with my portfolio. And guys, I pretty much stayed true to my rules. Last Wednesday, I sold pretty much everything. We're talking the Amazon calls, the Expedia position that I got assigned, Shopify, the Alibaba position that I've been holding for the past couple of months, all of the Apple shares as well. The Apple calls were sold 2 Fridays prior at a profit, but really everything, the assigned Intel shares, the Nike shares as well that I had, the JP Morgans, the Expedias, the everything, guys, pretty much everything, right? Now, why did I do this, guys? Was it because that I was panicking or whatnot? No, absolutely not. I was telling you guys that I was going to sell them to take further opportunities in more high conviction plays. Now that the market is selling off, it's freeing up a lot of opportunities that we did not have 2 weeks ago. And I want to have maximum buying power so I can be able to play these companies, especially with heightened VIX right now. And the fact that a lot of big tech earnings are going to be here over the next 2 weeks. There's a lot of volatility and a lot of premium to be had in the markets right now. And I want to maintain full buying power to do it. And I'll show you guys what I'm doing with this strategy right now. We are taking more risk, but there will also be more rewards, and I think we will be able to make a hefty profit. So this strategy that I'm running right now, guys, is the 2 standard deviation or more play from earnings. So you pulled up Tesla, and you guys know, if you watch my top 5 options videos, I always go over the expected moves. You can see the expected move on Tesla, right? 9%. So when I'm writing for these companies for earnings, I will be writing 2 standard deviations, which is twice the number that you see on your screen. So if an expected move is 9% to the downside, I'm going 18% or more, 20, 22%, right? The reason that we're doing that right now is because since the VIX right now is higher as a whole than it was in prior earnings quarters, this is where we get the juicy premium from, guys. Usually the market makers in prior earnings cycles, yes, prior to earnings, right? Before a company has earnings, the volatility on that stock goes up, right? Yes. But still, in prior earnings cycles, you weren't really able to get much premium at 2 standard deviations. It was just too far, right? And the ROI on those trades wasn't the best. But now in this earnings cycle, with the heightened volatility, with the stocks that have already sold off a lot coming into the last 2 weeks, right? Now we can get very good premium for even more than 2 standard deviations away from the move. And a lot of these stocks have already sold off a lot. So a lot of these strikes, guys, I'm writing, 10, 15, 20% below, and we're looking to make 1-day trades. So I'll bring up the ones that I have for tomorrow. You'll see a bunch of earnings that are coming out tomorrow morning, right? GM, UPS, GE, Pepsi, Lockheed Martin, Spotify, a lot of these trades, right? Well, I'm pretty much in every single one of them. I always tell you guys not to play earnings, but at this point in time, the risk to reward is, in my opinion, quite favorable just because we can get such lower strikes because of the increase in volatility. And the goal is not to get 0.5%, guys, on these trades, right? The goal is just to get as many of these trades as humanly possible. We're going for the unexpected moves, right? If one of these trades goes sour, it will be an unexpected move. And at that point, the stock will pull back a lot. So the goal with this strategy is to combine 2 standard deviations worth of move with a big area of support. So the way that I go about choosing which one of these earnings plays I want to go through. I go through each and every one of these big companies that I like. Obviously, I'm not going to write it on companies that I don't like, right? But any company that's relatively solid, good balance sheet, good fundamentals, I will make a play. I'll see the expected move of GM. And then if that expected move is 5%, I'll look at the strikes that are 10% below current price. And then I'll see, are those strike prices lining up with areas of support? And those are all the trades that I took today. So you'll see that we have a lot of them here, guys. I took the GM 39s. You can see we only got 6 cents for them, but it's literally for 1 day of trading, guys. Most of all the premium out of these contracts will come out of them after earnings. If either the stock comes down less than the expected move, right? Let's say it only goes down. The expected move is 5% and only goes down 5, 4, maybe 3%, or stays flat, or the stock goes up after earnings, I will win in all of those conditions. That's why we don't really have to go for the 0.5% rule. It's more of we're going for, is there enough premium to make the trade at all? I'll give you an example for GE, right? So GE, you can see my average price on these GEs right here is for about 138. I'll just do one example, right? So just so you guys understand what I'm talking about. So I'll give you a numerical example. So GE, the expected move on GE, I don't know why it doesn't show right here, but yeah, so I guess this one is not showing on options AI. So let's try to take another one just because I want to show you the purpose of the example. It was before. The expected move was about 3.5%, right, guys? So it was about 3. Let's just take 3.5% as a given, right? So that expected move for GE, 3.5% to the downside, was about the 145 area. At which position did I choose to write? You can see I went with the 138s. The 138s from current price is pretty much 8%, 8.5%. So it's twice the expected move. And the 138s, well, funny enough, are also in a very nice area of support. That is why I took that trade. So GE, you might think that, oh, well, it's only paying 44 cents. It's not the 0.5% rule for the week. You are right, but we're not taking this trade for 1 full week. We're taking it for only 1 single day. So what you can do is, depending on how many days are left in the week, you'll see that these come out on the Tuesday, right? So technically speaking, we then have 4 more days of trading afterwards. So if I were to multiply this premium here by 5 days, right, since this is only the premium for 1 day of trading, on an annualized ROI basis, you could assume that this would be almost $2, which is well above our 1% rule, right? So that's just a quick mental way of figuring out whether you're getting paid enough for the remaining days in the week. All of these earnings plays are going to be 1 day plays. So even if you get a little, if you can even get a little bit of premium, guys, That is the most important thing. The goal is to line up as much of these plays as possible. We're playing the probabilities, nothing more. That's all we're doing. We are playing the probabilities. And obviously when you're playing the probabilities, the law of large numbers is on your side. So it is in your advantage to make the most amount of these plays as humanly possible. So that's why you can see some of these RTX Raytheon companies contracts, right, are only about, some are 19 cents, some are 26 cents. It doesn't matter, guys. That's good enough on an annualized ROI basis if we're only in the trade for one single day. So you can see all of the different trades that I have. All of these, guys, are 1 day plays that I'm looking for. And the amounts, although they do appear small, they do definitely add up. So that's why I freed up all the buying power, guys, is because a lot of these companies are currently in multi-week dips already. And now we're going 2 times an expected move from earnings, which means that if we're assigned some of these companies, guys, right, or if the trades go against us, usually the stock becomes an extremely attractive level, especially with the fact that we've been selling off already for the past 2, sometimes 3 weeks on a lot of these companies, right? The only one that I got assigned last week was TSM, but I played TSM after earnings. I liked the 130 strike, so I got it. It dipped a bit more on Friday. I got assigned 100 shares of TSM, but I really like this company as a whole. I wrote the 130 calls. Our break even on TSM right now is like, I don't know, like 128 bucks, something like that. So pretty good. And TSM right now is trading roughly above that too. So TSM, even this one, guys, I'm not sure if I want to wait the full week for it. I may just close the position at a slight little gain and reallocate the capital to a potential earnings play that I do want to trade. But I will be trading all of the big tech earnings this week as a whole. You can see the only positions that I maintain were my few swing trade entries that I really like their levels at, and that I think that I need to build out more of a position. So I didn't cut those because the size of the positions are really, really small. I want to build into them more. But that's pretty much the gist of things, guys. That's why I closed out the Apple position, the Amazon leap call that I had. I feel that I may be able to get an even better entry on it. So I just took all the profits that I could last week, and we basically netted the account into cash and getting ready for these next 2 weeks of earnings, because I'll probably be able to go shopping for all the same companies that I was in at potentially even better prices. So that's what we're looking to do here, guys. We're really just maintaining a lot of cash, and we're trying to generate as much cash as possible by farming premium in this environment of heightened fear, of heightened VIX, right? Heightened volatility. That is the play that those are the plays that I'm going to be making. But as I said, guys, none of this is financial advice. This is just what I'm doing. I will still go back to the wheel strategy, but I just feel that now is the time to strike when the iron is hot. And if there's so much juicy premium on the table, guys, if I can be making, at any point in time, right? If I can be making a couple $100 a day on this, let's say like, $200, $300, $400 just farming these premiums. And you'll see I didn't last week on, I did a few examples here for you guys last week. So we started off last week doing this on Netflix. So take a look at these juicy Netflix contracts. These were twice the expected move on Netflix. We got $315 for one of these contracts, the 520s for this week, and the 510s for last week. So those pretty much ended worthless. I closed this one last week for worthless pretty much. That was a free $140. And this Netflix 520, the stock did drop a little bit, but I did close them on the day today. And you can see that close right here for about 67 cents. I'm even future swing trading. So I put my money where my mouth is. We were daily oversold conditions, right? And I was saying to you guys that every time the SPY, right, SPY and QQQ, when we hit first daily oversold conditions after an all-time high, it is an opportunity for a buy. You can see that right here, guys. I did make a swing trade on it. I opened it first thing last night when futures opened. It opened up a little bit up. I waited for a dip, and then I placed that order and put the stop loss pretty much below your all-time low. So I got in here and I exited over the course of the afternoon. You can see those orders right here. So here is your buy order that was placed pretty much last night at 627. And then we closed that out for a very juicy profit. This was about, $300 something of profit. We closed that trade pretty much today in the afternoon. You can see that contract right down here, closed at about 2:50 p.m. Very, very, very decent gain, guys, about $300 on that one. So we're rolling, guys. We're really, we're doing a lot more day trading, doing a lot more swing trading, and just pivoting away from the wheel strategy. The wheel strategy really runs best in a market, guys, that is really, a constant wave of up. Right now, what we need to be doing, guys, with this extended drawdowns and extended volatility, need to be making the most of it, need to find the companies that are getting the most oversold quickly, and that also have earnings potentially, and then riding strikes so ridiculously low underneath them that if we get assigned, we're not even worried, guys. That's why I pivoted away from the wheel strategy a little bit. That's why Nike, Nike, Alibaba, those trades that I was trapped in, even Apple that I was trapped in for the last month, I just said, you know what? If I can get all these stocks back after having made a bunch of money just farming premium, I'll just buy them back, whether they're cheaper or more expensive than the levels that I sold them at, doesn't matter. I'm fully focused, locked in the next 2 weeks at farming the most amount of strategy as possible. So hopefully all of that was helpful, guys. I know it's a little bit more risky, but then again, guys, that's why they call it the trading account, right? I have my long-term share portfolio that I never touch. And then the trading account, we have to readjust the strategy when certain data changes and when we see an opportunity on the table. So you'll see I really only run 2 types of strategies. This one, which I play more earnings a bit heavily, the wheel strategy, and then there are the call options, which you guys will see as we approach the bottoming out of this cycle. You guys are going to see a lot more call options out of me. I've been waiting for them. I've been saying on the channel, I've been waiting for these since February and March, and now they're finally here. So expect me to do a lot more share replacement, right? Instead of buying 100 shares of Alibaba at $70, I'll probably just buy a leap call instead. It costs less money, and you do have leverage in it too. So the Apple position that I cut loose, probably going to replace that with leap call options. The Baba position that I cut loose, probably going to replace that with leap call options as well. So hopefully all that was educational, guys. If you enjoyed today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Consider also subscribing to the channel if you're new. We'd love to have you here. Over 1,100 of you have subscribed so far, and I look forward to growing the channel much more and meeting a lot more of you people, because it's been extremely fun so far. And lastly, if you have any questions whatsoever, please feel free to leave them down below in the comments. Guys, this week, since it's a very busy week and I'm going to be doing a lot of plays, I will carry you guys through the strategy, right? So I'll be doing a portfolio update probably every single day of the week in these daily market recap videos. I'll be doing earnings videos separate than these daily market recaps. So these daily market recaps can just be focused on technical analysis and my trades. And then the earnings videos, I'll make 1 earnings video per day and probably do 2-3 companies at that time. So moving forward, that is how we're going to do the structure of the videos for earnings. So take care, guys. See you tomorrow after the close. Peace.